So what's annual report? Annual report is a document prepared by management and distributed to current and potential investors. This we have discussed on day 1, but since I had to officially complete session 6, so I am completing in these 2 slides and the assignment that I have given. He read the annual report of the annual report is actually a 200-300 page document, right? So at least be aware of what are the various reports contained within the sub reports contained within the annual report, right? So it will inform about company's past performance, about future prospects. It's used by investors and other everyone outside the company. If you want to know more about a company, how do you know? Read the annual report. You will be surprised, but Warren Buffett, before he invests in a company, he personally reads. He doesn't outsource it. He personally reads annual. He has read up to 50 to 60 years, last 60 years of annual report of a company before investing in a company, right? So you are ready to read 1 year's annual report of one company. If you want to make money, that is the, and he's so rich, he can outsource it कि तुम लोग पढ़ लेना और मेरे को summarize कर दो presentation, right? He reads every single word himself. Right? So, and this class, the subject is not called financial accounting, it's called financial reporting and analysis, right? Actually it's financial accounting. So we will, now that the basics are built, we will start analyzing financial statements. So that's what we will do in the next class, right? So this is understood. Next. So what are the contents of annual report? Of course it will have profit and loss account, balance sheet, cash flow statement, notes to accounts, all of that will be there. It will have a letter from the corporate management, letter from the board of directors, letter from the chairman. So the chairman will first summarize everything about the company. This is what your company did. And there will be an MD&A section, management discussion and analysis, which is called discussion and analysis of economic events. How recent events impact your company, what are the strategies that your company is deploying, and how your company plans to do business in future, whether your company has come up with some new inventions or new products or some new innovations or whatever. So all of that is contained there. And there of course we have the notes to accounts, which are footnotes explaining the elements of financial statement. So what are the different policies that accounting policies on depreciation, on cost of goods sold, on all other topics, every single topic, right? What are the accounting policies used for every single topic? Report of management and auditors on company's internal controls. The auditor also has to certify that you have adequate internal controls, right? How many are from BCom background or BBA background? So you have seen something like that, right? You have all seen that. So auditor also has to certify. Who is an auditor? Auditor is an independent person who is looking into your financial statement, and they are chartered accountants in India. So they will certify that your financial statements are prepared in accordance with the accounting standards issued by Institute of Chartered Accountants of India, right? So that's what they do, and they say your accounts or your financial statements present a true and fair view of the operations of the company. And all other corporate information. It will also have a section on let's say corporate governance, on CSR, what are the CSR related activities you are doing, so when you look at the annual report, you realize, Arey baap re baap, kitna. And I can show you an email from EMBA students. In their case, I said before we went on a break, I told them ki break mein ab khali baith ke bore ho jate wo bhi, right? So I gave them ki analyze the annual report of your own company where you are working. And one of the director of data, he called me to say how much the assignment has benefited him. ठीक है ना? So next, a change in so we have already discussed this. Change in depreciation method is done in only one of the following conditions: for compliance of statute, for compliance of accounting standards, and for more appropriate presentation of the financial statement. We have already kind of discussed this. Next, and yeah, this slide is important. accounting, look at what it's saying. Accounting policy adopted in relation to inventory valuation or depreciation can to a large extent influence income determination for a particular period, because if you remember yesterday's examples, we saw straight line with 10, 10, 10, 10, right? But if you look at that double declining balance method, first year was how much? 20, second year was how much? 10, broadly 20.5, second year was 10.25, third year was 5.125, and fourth year was 2.56, right? So, what is happening is, let us say you are the CEO of a company, you are retiring next year, ठीक है? यार डबल डिक्लाइनिंग में मेरा तो नुकसान हो गया ना, वाई आर यू सीइंग व्हाट आई एम सेइंग? डबल डिक्लाइनिंग में सीईओ का नुकसान हो रहा है, भाई कैन एनीवन एक्सप्लेन? हाँ बोला मैं रिटायर होने के बाद तो एक्सपेंस नहीं है, और मैं जब तक काम कर रहा हूँ तब तक टिल आई एम वर्किंग एक्सपेंस इज 20, एंड आफ्टर आई रिटायर expense is 10 and 5 and 2.5. You get what I am saying? So, what is the incentive of the CEO? You are actually hurting my, not reputation, my bonus. Your reputation की किसको चिंता है, पैसे किसे? You are hurting my bonus. Are you getting what I am saying? And I am not saying CEOs are like that, but I am just helping you go inside the mind of a CEO. Why are you making it difficult to achieve my targets? Why are you making it difficult to achieve my targets? You all of you understand what I said? My target was how much yesterday we were saying? Like 10, right? 10 crores. And if I am at 9.8 crore, I will say, and if I have the choice, to apply either a straight line method or a double declining balance method, I will say forget double declining and just do what I say. Are you getting what I am saying? Because only because of this one action I will be able to, right? Yeah. And in reality what happens is, of course, in our example we only had one truck, right? But assets with same rates of depreciation are put under block. So, that is the reason we call them gross block of assets or net block of assets, because the reason we use the word block is we club, अगर ये chair का और ये table का और मान लो इस gate का, let us say, if the rate of depreciation is same, तो एक साथ ही कर लो, rather than providing for depreciation उस chair का अलग होगा, इस table का अलग होगा, उस chair का अलग होगा. Are you getting it? बोला कि just club them together, we bought it on the same day, thousands of chairs together, thousands of tables together and hundreds of gates together, we say the value of all total is 1 crore, right. So, on 1 crore, instead of providing for depreciation on every single chair and every single table and every single gate, we will just say on 1 crore we provide for say 10% depreciation. Are you getting what I am saying? So, that is the reason it is called as gross block. You get what I am? So, when we said na ki, we call them as gross block and net block also. So, that is the reason. So, that covers some elements of tax elements also. So, we have this part I have just given you an example, you understand how we can switch, not really switch, by switching from one method of depreciation to another, we can play with determination of income, we can play, and that is the reason it is not allowed. So, company law requires that particular method once accepted should be consistently tried for at least for a period of 3 years, right. Next. Yeah, this question, next. Expenditure, I will just explain something very interesting in relation to a car, repairs, maintenance and major capex, right. What is repairs? Repairs is you are driving a car, it met with an accident. Headlight is broken, mudguard is broken, सामने का bonnet is broken, and so you have to repair everything. So, that is repairs, right. So, repairs is occasional cost of restoring a fixed asset to its ordinary operating condition after breakdown, accident or damage, like cars repairs after accident, denting and painting has to be done, headlight has to be repaired, mudguard and bonnet and everything. You got that? So, that is repairs. What is maintenance? Maintenance is, if any, all of you or many of you have a car at your home, and what you will see, once a year you have to take the car to the garage and you have to tell them कि भैया engine oil change करो, oil filter change करो, some AC filter change करो, you do that once a year, right? So that is maintenance. So routine recurring cost of activity is necessary to keep a fixed asset in operating condition. So that's maintenance and that's repairs. So you understood the difference between repairs and maintenance? So both repairs and maintenance expenses are to be expensed. They are to be expensed both. So it doesn't matter. So but both are to be expensed. Next. Improvement. At times you incur major expense to improve a machinery or a car, an expenditure that increases future benefits provided by an existing asset by either decreasing its operating cost or increasing its rate of output or improving its safety or reducing pollution or prolonging life, also known as betterment or capital improvement, right? Capital improvement or capex, it is a capital expenditure. So example, let us say the car engine had become old. Now a newer version of engine is available, you put a new engine of the car. So that is a major expense, you have to incur at least 2-3 lakh rupees just to replace the engine of the car. So that is not neither repair nor maintenance. You got what I am saying? It is capital improvement or capex. And you might have seen कि everyone is complaining, ask any Ola or Uber driver, they will say आजकल कितने दाम बढ़ गए पेट्रोल और डीजल के, right? And so what do they do then? They say कि they fit this CNG engine, right? So fitting a new gas engine, so because it will cost them initially 2 lakh rupees to fit that or 1 lakh rupees to fit it, but after you have fitted it, the operating cost of running the vehicle on a per kilometer basis, for any car when you buy it, the first question that people ask in India is mileage कितना देती है, right? So बोले कि अच्छा 20 की mileage देती है, अच्छा है, that's nice, right? Or if it's only 10, then you say अरे यार बहुत ही कम है, right? So the per unit cost of a petrol engine, let us say for 1 kilometer the cost of running the car is approximately 9 or 10 rupees. But for a diesel engine it will be only 7 or 8 rupees, and for a CNG engine it will be only 5 rupees. So fitting a new CNG engine will lead to a major decrease in its operating cost. Of course, it is a one time expenditure, you do not fit a CNG engine every year or you occasionally, you just fit it once and then it continues, right. So that is a expenditure after acquisition. So even though you have acquired the car and now you have put a new CNG engine, so and the same holds for any other machinery also, you have made major repairs to a machinery, major repairs, so that can also be capitalized because the intention is it will lead to one of these things. Next. So repairs and maintenance regarded as expenses of current period, and they maintain the level of an asset's future benefits, they just maintain that level. But improvements, that capital improvement is a capex, major capital improvement, or costs are capitalized, added to the value of the asset and therefore depreciated over time. Are you getting it? What is the impact of expense? No need, it is going in this year's expense, topic closed, but when you are capitalizing it, then it increases the value of the asset and in subsequent years it will be depreciated over time. Eventually everything will become 0. Eventually, you remember what I said? In the long run we are all dead, John Maynard Keynes, right? In the long run we are all dead, eventually everything will become 0. And so you have seen the difference, repairs and maintenance are to be expensed, improvements are to be capitalized and subsequently depreciated. And what is the improvement? It will increase the future benefits provided by asset, while repairs and maintenance will only maintain the level of an asset's current benefits, right. Next. Gains and losses on sales of tangible and intangible assets. At times, that topic is closed. So now we are moving on to the new topic, which is gains and losses on sales of tangible and intangible assets. How to determine the gain? In class 5, we used to determine the gain as selling price minus cost price, right? That was profit. In this case, once an asset is depreciated, you bought an asset for 40,000, but you have depreciated it up to 20,000, no 25,000. So now what is the net carrying value or the net book value? No, 40, you have depreciated 25. So, 40 minus 25, cost, original cost 40, accumulated depreciation 25. So, net carrying value or net book value of the asset is 15, 40 minus 25 equal to 15. So, that basically becomes your new cost. Are you getting it? When you have to determine the profit, then that carrying value or book value becomes your cost, and profit, selling price will always be selling price only. Whether you are selling an old asset or a new asset, selling price of that asset can be either above 15, in which case you will have profit, or it can be below 15, in which case you will have loss, or it can be 15, in which case you have neither profit nor loss. No other possibility. All clear? And that is what this slide is saying. So, proceeds received is nothing but selling price. If selling price is greater than cost price, it will be a gain. If selling price is less than cost, and cost is what? Net book value, right? We have already explained it, then it is a loss. And how will we calculate it? Difference between proceeds received, which is the selling price, and the net book value or net carrying amount, which is the cost price, right? That is it. Next. So, let us calculate. So, when we sell the asset, then that asset, does it remain with us? So, if an asset is not with us, should it appear in the books? That means it should be removed from the books. बस वही चीज़ है. So, the disposal requires a removal of the assets book value which appears in the accounts. One, if you remember, we said asset, we had two types of accounts. Do you remember when we were talking of how to charge depreciation? We said two methods, either reduce it from the cost of the asset itself. So, every year from asset value 10,000, 9,000, 8,000, 7,000, it is going down. Alternate is, we said the other was do not touch the asset account. We will have an accumulated depreciation account, and accumulated depreciation account will keep going up every year, and then the net book value of the asset will be shown as gross block less accumulated depreciation equal to net block, or total original cost of the asset 41,000 less accumulated depreciation equal to net carrying value. Is everyone clear? So, that is what it is. These two accounts then have to be closed, right? Because the asset is, the moment we sell the asset, asset goes out of business. Since asset has gone out of business, it should also go out of books of accounts, and therefore, whatever is appearing in those books of accounts for that particular asset should be removed or closed. Yeah, next. So, so coming back to our truck example, 41,000 cost, 1,000 residual value. After 2 years, what is the book value of the asset? 10,000, as I am going for straight line basis, right? 10,000 was the annual depreciation. So, 41 was original cost. After 1 year, 31. After year 2, 21. After year 3, 11. After year 4, 1. And then that is also the disposal value. So, we will sell it off. Assume now, after 2 years, the original cost is still 41. Forget the sale price. Forget the sale price. Let us look at the cost price. Original cost is 41. Accumulated depreciation is 20. So, after 2 years, the book value or the revised cost price is how much? 21,000. And how much did you sell it for? 27. So, how much is the profit? 6. It is that simple, right? Next. Now, there is no difference between the two slides except that cost will remain the same. What if the selling price is not 27 but 17? Then instead of a profit of 6, we have a loss of 4. All clear? Next. And how will it look like? So, what is the, now you have to close, gain ho gaya, loss ho gaya is a separate issue, but we have to close the books of accounts. We have to close the books of accounts for that particular asset, for that delivery truck. If we are selling it, we have to remove the asset account, we have to remove the accumulated depreciation account, Equipment account, what was the original cost? 41. Equipment account had a debit balance. Equipment account had a debit balance. If we have to close the account, we have to credit it to make it 0. Equipment account is an asset. Asset had a debit balance. If we have to close the account, we have to credit it so as to make it 0. Equipment had a debit balance of how much? 41. So, equipment account had a debit balance of 41, it is credited 41. Clear? Accumulated depreciation had a credit balance. Accumulated depreciation was contra account, if you remember, you have promised enough during past weekend. So, accumulated depreciation was a contra account, it had a credit balance. Depreciation had a debit balance being an expense. Depreciation being an expense had a debit balance, but accumulated depreciation was a contra account and it had a credit balance. I have done this, ऐसे मत देखो कि first time क्या बोल रहे हो, right? I have done this in the previous, one of the previous sessions, right? You remember that? Yes, yes. And so, accumulated depreciation, since it has a credit balance, if you have to close it, you have to debit it by the same value and then it becomes 0. So, credit and debit will cancel each other. So, accumulated depreciation is 20. Just look at these two, just look at these two. Don't these two are these not saying that the net balance of equipment is 21? Are you seeing what I am saying? The net balance is the cost of the revised cost of the equipment account is 21. Are you seeing that? These two. Accumulated depreciation, दोनों का joint impact देख लो. It could very well have been written as equipment at 21. Everyone clear? Anyone not clear? We are all clear. 21 was the cost, which is what it is. What was the selling price? 27. First case was 27. So, selling price cash आ गया. Increase in cash is debit. So, cash 27 and this is credit of 21. So, the difference of cash 27, which is a debit, right, because we received cash, and this was, so this is selling price. This jointly represents the cost price 41 minus 20, net of 21, and the difference between the two is gain 6. वही चीज लिखा हुआ है but in the form of an accounting entry. Selling price 27, cost selling price 27, cost price 21, gain 6. देख लो, digest it. Is there anyone who is not understood? Right? So, this is the accounting entry. Cash account debit, increase in asset is cash. Increase in asset is debit, cash account debited 27. Accumulated depreciation, for reversing the credit balance, we are debiting it. Equipment, for reversing the debit balance, for reversing the credit balance, we have debited it. For reversing the debit balance, we have credited it. And gain increases your shareholders equity or decreases your shareholders equity? Increase in shareholders equity is credit. So, alternative, so what was the first scenario? Selling price 27. What was the second case? Selling price 17. Selling price 27, you remember 27 minus 21, 6 profit. Selling price 17, we remember 17 minus 21, which is a loss of 4. So, selling price 17, you can see it. Cost price will remain the same, but cost price is accumulated depreciation or equipment. Look at both accumulated depreciation equipment. It is the same as this, exactly the same. That will always be the case. 20 hai, and the difference between selling price and the different selling price, jointly these two represent cost price. Difference of selling minus cost, when it is a gain, it is a credit. When it is a loss, selling price, this and this represents the cost price. The difference, when it is a gain, it is a credit. When it is a loss, it is a debit. That is all. Because loss reduces stockholders equity, right? Are you all clear?
So when we write this, are we supposed to write this?
नहीं, वो तो वो है, ये तो journal entry है. Can you see that this is a journal entry? Cash debit, accumulated depreciation debit to equipment to gain on sale. Here it is also a journal entry. Cash debit, accumulated depreciation debit, loss on sale debit to equipment 41. This is also a journal entry, right? This is a journal entry, this is a journal entry. What this is showing is the ledger account. This is the ledger account, right? हाँ,
This will come in a different format and not on the same page.
वो तो साथ ही दिखा दिया. सी इधर हमने जर्नल एंट्री पास की है, इधर हमने लेजर अकाउंट दिखा दिया, राइट? आर यू गेटिंग दैट? कैश डेबिट 27, इक्विपमेंट ओरिजिनल बैलेंस 41 डेबिट था, अब क्रेडिट किया है. देखो स्टार लगाया हुआ है, बिगिनिंग बैलेंस इज रिप्रेजेंटेड बाय स्टार. जस्ट लुक इट, स्टार इज द बिगिनिंग बैलेंस. लुक एट दिस. हेलो, एक चीज देख लो पहले, देन ऑफ कोर्स आई एम ग्लैड यू आर एक्सप्लेनिंग टू योर नेबर. आई एम वेरी ग्लैड बिकॉज दे नीड हेल्प, राइट? इफ यू आर नॉट फ्रॉम अ बीकॉम बैकग्राउंड, थोड़ा सा अजीब लगेगा कि हो क्या रहा है, स्पेशली व्हेन यू हैव नॉट प्रैक्टिस्ड. बोलो बगल वाले का कॉपी करके कर दिया था असाइनमेंट, तो प्रॉब्लम आएगी, बट डोंट वरी, ये प्रॉब्लम वापस आएगी एग्जाम में, ठीक है? तो ये प्रॉब्लम बार बार आएगी टिल यू प्रैक्टिस एंड लर्न इट, ठीक है? सो बिगिनिंग बैलेंस इज हाउ मच? This is the asterisk, or that star represents the beginning balance. So equipment had a beginning balance of 41, accumulated depreciation had a beginning balance of 20, right? And then a cash 27 debit, cash account debit side 27, accumulated depreciation credited by 20, credited by 20, equipment account सॉरी वो डेबिटेड था, ये क्रेडिट तो ओरिजिनल बैलेंस था, 20 इज द डेबिट. Equipment account credited by 41, 41 is the opening balance and this 41 is the new entry, and gain on sale again is a credit. So this side is representing the 4 ledger accounts, as you can see, and this side is representing the journal entries, right? And but I have already explained the mathematics behind it, and as you can see it's very simple, right? Everyone clear? Next. So gain or loss on sale of assets don't always appear as a separate line item, because if we have like 50-60 miscellaneous items, shall we write every single miscellaneous item, or shall we say, you know, if say 10 students have the same query with me, 10 students have exactly the same query with me, should I answer all 10 of them individually, or can I tell them कि यार 10 के 10 का सेम ही क्वेरी है, 10 के 10 एक साथ आ जाओ, सबको एक साथ बता देते हैं. Are you getting that? So that's what is happening. If you have lots of miscellaneous items, you don't disclose every single one of them separately. You just say club them, and you say it's a miscellaneous category called other incomes or other expenses. उसमें डाल दिया, right? We will have lots of sale of mangoes. अब करेगो क्या sale of mangoes? अगर even if you have sold mangoes 5,000 rupees, what is the point in disclosing to the rest of the world if your business is worth 10,000 crores, right? बोले यार ठीक है 5,000. So you got it? So you will club it, all other incomes are clubbed together, right? Next. Oh, अभी तक we have not reached the statement of cash flows. So skip कर दो. We have not reached statement of cash flows, we will do it later. So I am skipping this, but feel free to read it on your own, just because I have not taught the cash flow statement till now. Revaluation of tangible assets. So now you remember we said assets are to be recorded at cost, and that's the traditional way of accounting, but IFRS also allows revaluation of assets. So we will not go too much into detail, but I will still give you a decent overview of the topic. We will not go too much into detail. So on these topics you don't really have to worry too much कि US GAAP क्या बोल रहा है और IFRS क्या बोल रहा है. US GAAP is a US generally accepted accounting principle, applicable to US companies. IFRS is international financial reporting standards, applicable in hundreds of countries. And in India we have practically IFRS only, but we have modified them to suit our local requirements. So it's 99% IFRS, 1% की change कृपया ऐसे करो इंडिया में. Are you getting it? So we will call them IND AS. IND AS means Indian Accounting Standards, right? IND AS. So these are the 3 terms used: US GAAP for US, IFRS for all European countries and a huge chunk of this planet, and IND AS, which is practically same as IFRS for Indian accounting standards. So upward revaluation US GAAP doesn't allow, ठीक है, but in IFRS it is okay to show assets at historical cost. So, it's IFRS is nowhere saying you must only show at fair value and not at historical cost, right. IFRS is saying you can very well show it as historical cost, therefore, we will consider that only. US GAAP में भी same है historical cost, India में भी traditional historical cost ही था, right. But upward revaluations जो है is allowed only under IFRS. Downward revaluation, do you remember day 2? We said accountants are conservative people. Do you remember that? Accountants are conservative people. So, if a person is conservative, that means कि risk नहीं लेना है भाई, no risk है, कोई भी झमेले में पड़ना ही नहीं है, वहाँ 4 आदमी लड़ाई कर रहे हैं, मतलब अपने दूर रहो. Are you getting that? So, that's a conservative person is someone who is risk averse, who will not take any risk at all. A conservative person is someone who is risk averse. So, what is the behavior of a conservative people? Conservatism principle of accounting says account for all possible expenses and losses, but do not account for potential incomes and gains. Do not account, actual gain income हो गया ठीक है अच्छी बात है, then you have to account. अभी sale of asset किया है, right, at 27,000 actual income हो गया, you must account for it. But the market price of my asset is 27,000 and the book value of my asset is 21,000. So, I have a 6,000 gain without actually selling it, potential gain. So, that potential gain will not be accounted for. So, that is the conservative principle of accounting. So, downward revaluation you have to do under both US GAAP and IFRS, but upward revaluation you can't do under US GAAP. It is permissible under IFRS, but it is not mandatory under IFRS. So, if an upward revaluation happens, it can be done, it may be done under IFRS. So, assets considered impaired when they cease to have economic value at least as large as their carrying value. Thank you. So, yeah. So, in simplest terms, impairment means fall in the value of an asset. In simplest terms, impairment means fall in the value of an asset, right. So, when the value of an asset falls, then what shall we do? That is the question, right. Let us next. So, if a company is electing the revaluation method, then they will show their fixed assets at fair value under IFRS. Of course, fixed assets carried at fair value will result in revaluation gain if the assets are written up to fair value and revaluation loss if the assets are written down to fair value. Are you seeing what I am saying? It is clear, right? Fixed assets carried at fair value will result in revaluation gain if the assets are written up to fair value or revaluation loss if the assets are written down to fair value. Next. Revaluation gain, is it an actual gain? Revaluation gain is not an actual gain. Is it a cash gain? No. This is just a paper gain. हमने आज 100 रुपये में शेयर खरीदा, we bought a share at 100 rupees, the markets went up, our share went up, the book value of the market value of our shares has gone up from 100 to 105 today. Did we get that extra 5 rupees in our pocket? No. Accountants are conservative people. What they will say? Do not account for anticipated gains and losses, do not account for potential gains or losses or anticipated gains. Do not account for anticipated gains. So, it cannot be included in the net income. So, then where should it be shown? If it can't be shown under net income, there is something else which at this stage Just be aware there is something called as other comprehensive income. अभी उस पर मत जाओ. This is far beyond the scope of this class, but there is something called as other comprehensive income where it must be shown, and it is other comprehensive income is actually part of your equity only. So, it is accumulated in stockholders equity, but it is not part of your profit and loss account, it is not part of your normal profits. It will be credited to income only if the gain is a reversal of a revaluation loss previously recognized as a reduction of net income. Look at this thing. Usually it will not be shown, but in the past, when the asset value was 17 and cost price was 21, let us say you have not sold it, but you realize that the market price of the asset is 17, cost price is 21. So, because of revaluation you are losing 4,000. Let us say you have considered this revaluation loss already, कि 4,000 का revaluation loss you have shown under as reduction of your net income from profit and loss account, कि revaluation. Then if in the past you have taken that loss as a revaluation loss and shown as a reduction of net income, then you are allowed to take it now. Have you understood it? अगर पहले कभी if and only if in the past you have considered this revaluation loss as a reduction from net income, as a reduction from your profit and loss account, then now if you have a revaluation gain you can reverse up to that limit. अगर 4,000 का loss लिया था तो 4,000 तक का you can reverse up now, otherwise it will be shown as other comprehensive income and put separately. Other comprehensive income is like a separate pocket, you just consider it as a separate pocket. You can't put it under the normal profit and loss account, you will just have a separate pocket of other comprehensive income where you can put it. Is that clear? कि उसको main funds में कभी भी मत consider करना, consider it as part of a separate pocket called other comprehensive income. Next. Revaluation loss is first recognized in other comprehensive income offsetting previous revaluation gains, and remainder is a loss in the income statement. So, this is because we are conservative people, So, if you have in other comprehensive income some revaluation gains, then you can set off that revaluation loss against that, otherwise the remainder is a loss in the, it should be shown as a loss. अगर कुछ नहीं है then it should be shown as a loss in the income statement. So, revaluation loss can go to profit and loss account normally, but revaluation gain cannot go to profit and loss account. Revaluation gain will go to a separate thing called other comprehensive income. This is the essence of revaluation gain and loss. Next. Impairment of tangible assets, right. Next. So, impairment means downward revision in the value of an asset. Impairment means loss or fall in the value of an asset or downward revision in the downward revaluation due to impairment occur under both US GAAP and IFRS, and each reporting period companies assess whether impairment indicators exist, and if indicator कितना नंबर स्लाइड है 72 okay. If indicators suggest that impairment is possible, assets must be reviewed for impairment. Next. So, we are saying let us check whether impairment exists or not, that is all we are saying in this slide, right. Let us check impairment is downward revision in the value of an asset, and if there is a case of downward revision, then let us check through some indicators. What are some of the indicators that may lead to a review of for improvement? Decline in the market price of asset, that is the biggest indicator. If there is a major change in the way the asset is being used, adverse change in legal or business environment, evidence of obsolescence or physical damage. If you are thinking what is this adverse change in legal, you remember that just 4 years back suddenly COVID आ गया था and suddenly everyone was sitting idle, and then you realize people who wanted to sell stocks bought at 100, they were selling at 50 rupees, right. If you had bought a car, no one was ready. First, no one was ready to buy a car कि मेरे को नहीं चाहिए, मेरी तो खुद की गाड़ी खड़ी है, right? No one can move out. So car value fell. The demand for batteries grew up. Do you remember that? The demand for car batteries, Exide company and Amara Raja company, they were doing brilliantly because suddenly cars were just lying. You can't take it out. The demand for car batteries shot up because people won't buy new cars. कार तो ऐसे ही खड़ी है, but the battery is dying. You can't go anywhere. So the demand for car batteries went up. The pharma industry suddenly became a star, right? कि everyone is talking. किसी का बुखार हो नहीं हो, but they have 100 paracetamol lying at their home. कि in anticipation कि what if, or dolo, right? कि what if I have fever, right? So everyone had 100 paracetamol tablets lying at home, 25 cough bottles lying at home. So suddenly the demand for fever and cough and everything else shot up, all the medicines, right? And most businesses were flat, they were not doing anything, like, right? So when there is an adverse change in legal or business environment, we may consider what is the way forward. Evidence of obsolescence or physical damage. Suddenly the government has come, for our car example, the government has come up with a new emission standard. My car was a 7-year-old car. It does not meet the new emission standard. Of course, I will try my level best to ensure that it meets and get everything done, but at the same time the value of the car will fall. So if the value of the car is falling because it's now an old technology car, right? Very often you ask when you buy a car, नया मॉडल है कि पुराना मॉडल है, right? So if it's a new model, it's fine. पुराना मॉडल है, the value is lower, right? So next. So इसको इग्नोर ही कर देते हैं. See, it's a very simple thing. Two-step impairment review process under US GAAP is recoverability test and computation of loss. So loss तो करना ही था. Recoverability test is basically what can we recover. Go to the next slide. In IFRS, we don't have a two-step process. We are having a one-step process. Recoverability test is compares the sum of the expected future net cash flows from the use of the asset plus its expected future disposal with the current carrying. Current carrying value is your current cost. Current cost, current cost what was for our truck at the end of 2 years, it was 21. Current cost for our truck example at the end of 2 years was 21,000. And then we said if we can sell it for 27,000, then there is no impairment. But if we can only sell it for 17,000, then clearly there is an impairment. Are you getting that? So we will not really consider the selling price, but what it says is you have to consider the disposal value plus all the future net cash flows of the asset and the disposal value. So if the joint sum of future net, how will you calculate it? We will not enter that territory. If I don't expect this question to come in the exam, but if at all this question, if I don't expect it to come, but if this question comes, then this will be provided to you, that the future net cash flows plus the disposal value is this. So we will not enter this territory because net cash flows, how to calculate, is a detailed exercise in itself. When you, if anyone has ever prepared a business plan, then you know you prepare the cash. Has anyone prepared a business plan till date, or at least looked at a business plan? देखा तो होगा, नहीं देखा? देखा? किसी ने भी business plan भी नहीं देखा? You have made a business. So there you prepare the cash flows on a yearly basis, right? For next 10 years, right? 5-7 साल का तो बना ही होगा. हाँ, assumptions. And then of course you have to take lots of assumptions. Why do you need assumptions for business plans? Because business plan is for future. Who has seen the future, right? Asset is not impaired if the net future cash flows plus disposal value, if it is greater than 21, then asset is not impaired. If it is less than 21, then the asset is impaired. That part is clear? Huh? Okay. Next. So, yeah, look at this. This company owns an equipment with a net book value of 1,50,000 and estimated total expected future net flows are 127. So, recoverability says, is this future expected benefits or future expected net cash flows of 127 greater than 150 or not? So, nuksan hai na? You can see there is a loss. So, since there is a loss, potential loss, so it has failed the test of impairment and the asset value must be reduced. Are you getting what I am saying? What is the question saying? Book value, which is like the cost price, the current cost price is 150, estimated future benefits 127. So, therefore, it is a case of impairment. You can see it from the first line itself. You just have to see it mentally, cost price and selling price, topic closed. If you mentally see it as cost price and selling price, loss है तो impairment हो गया, profit है, no need for impairment. It's that simple. So, it is using some fancy terms, but it finally comes down to cost price versus selling price. Are you getting what I am saying? So, वही चीज़ है. So, since let us say this is not really selling price, the concept is different, but mentally think of it that way, because in the next slide we will see now this was the estimated future cash flows, but the actual selling price in the next slide we will see is 105. So, then go to the next slide. Equipment has a market price of 105. So, how much should we account for impairment? Net book cost was how much? 150. Selling price, we will call it as say fair value. We have not yet seen what is a fair value. We will probably do it in next class. Next class mein batana, then we can talk briefly about what is a concept of fair value, right? So, net book value 150, fair value 105, impairment loss 45. And how do we account for it? Loss on impairment is a debit, it is a loss, reduces stockholders equity, and accumulated depreciation is credited, because we have to provide for more depreciation, right? We have to provide for more depreciation. What was the depreciation till date? Whatever it was. Uske baad it was value was 150. So, we have to provide for more depreciation of 45. So, that now the book value of the equipment has become 105. So, the book, are you seeing that? When we provide for 45,000 extra depreciation, the net carrying cost of the asset was how much? 1,50,000. Since we provided 45,000 extra depreciation, therefore, now the new net carrying cost is how much? 150 minus 45, which is 105, and that 105 is also equal to the fair value of 105. So, now we have done it, but in the process of providing more depreciation of 45, we have a corresponding debit, and what is that debit? That debit is a reduction in stockholders equity, and that reduction in stockholders equity is seen here as loss on impairment. Are you getting it? It's very simple. So, do not worry on these parts. I may not ask you, I do not know whether I will. I may not ask you accounting entries on these parts, because it is too much, right? You are managers, right? Because to start with, we said you are all managers, right? You are all managers, na? So, I will not ask you accounting entries for this part, but I may ask you, अब इतना मेहनत किया है इन लोगों ने, ट्रायल बैलेंस बनाया है, प्रॉफिट एंड लॉस अकाउंट बनाया है, बैलेंस शीट बनाया है, सो आई मे आस्क यू टू प्रिपेयर दैट इन द एग्जाम, राइट? उतना, क्योंकि लास्ट वीकेंड सब एक्सपर्ट्स बन ही गए हो, राइट? सो आई विल जस्ट चेक कि किसने खुद बनाया था और किसने कॉपी करके बनाया था, सो दैट विल बी पार्ट ऑफ द एग्जामिनेशन प्रोसेस, राइट? नेक्स्ट, सो IFRS uses a single step impairment process. वहाँ पर दो टेस्ट करती है, रिकवरेबिलिटी टेस्ट एंड देन कंप्यूट द लॉस. बात वही है, रिकवरेबल अमाउंट कितना है. सो दे विल से कंपेयर द कैरिंग वैल्यू ऑफ द एसेट विच इज रिकवरेबल अमाउंट, एंड इफ द कैरिंग वैल्यू इज more than the recoverable amount, then we have a loss. If the carrying value is less than the recoverable amount, then we don't have a loss, right? So, recoverable amount, what is the calculation of recoverable? अच्छा चलो fair value का almost आ ही गया. Recoverable amount is, what is the calculation? Is the higher of either fair value minus cost to sell. Fair value you can't decide, it will be given in the question, because how do you decide the fair value? It requires knowledge of valuation methods, which is far beyond the scope of this syllabus. So, if we gave that, okay, fair value is this, cost to sell is this, value in use is this, calculated as the present value of expected future net cash flows. So, expected future net cash flows, the other name for, and the present value of that. So, compare the carrying value, the cost, with the recoverable amount, which is recoverable amount is the higher of fair value minus cost to sell, we will see later, and value in use, which is present value of expected future net cash flows. If I start talking about how to calculate cash flows and all, it will take 20-25 minutes. So, I will only discuss this in next class, and actually it is part of our FM class, not even part of this class, to tell you the truth, right. So, we take, in simplest term, think of it as fair value minus cost to sell is what? ये तो हो गया कि कितने में बिकेगा, and cost to sell at times it may happen, for example, गाड़ी, you have an old car, you want to sell it. Now, who will find the buyer? Who will sign that agreement? Who will get it transferred? So, you just hire an agent. Once you hire an agent, he will say, मैं 10,000 या 5,000 रुपए लूँगा, I will find you a buyer, I will ensure that all the work related to transfer is done. So, then the cost to sell is, let us say the market value of the car is say 1 lakh rupees say. So, then fair value is say 1 lakh, market value bhi 1 lakh hai, but 10,000 rupees I have to pay to the broker. So, 1 lakh minus cost to sell, that brokerage and transfer related expenses 10,000 is the recoverable amount. Are you getting what I am saying? So, it is not 1 lakh, but also includes the cost to sell. Impairment loss recognized if the carrying amount is greater than the recoverable amount. Both is clear, right? If the cost price is higher than the selling price, then there is a loss. The same principle applies. Next, intangible assets. Yeah, we know what are intangible assets. They are non-physical rights or claims to expected benefits, often contractual in nature. So, these are patents, copyrights, trademarks, all those things, right. Next. So, in US GAAP, accounting for intangible assets depend on following factors: whether a company acquires the intangible asset from outside or develops. So, there are two types of intangible assets. One, she did some invention, I just purchased it from her, that is externally acquired intangible asset. Second is, I did my own research and development and came up with something new. So, that is my internally developed intangible asset. So, accounting depends on these factors and whether the intangible asset has a finite life or indefinite life, because you will see what is happening in each of these cases.
So, both of these assets might have an IP?
Intellectual property. In IP is yes. Both means these ones. सबके लिए. IP is applicable to all 4 cases. Next. So, in the US GAAP, as we said, if it is an externally acquired versus internally developed, right. Externally acquired is the one that I bought from outside, internally developed is something that I did on my own through my own R&D efforts. So, a company's balance sheet lists an intangible asset only if the company purchased the rights to the asset from an external party. I spent 10 lakh to buy this copyright or any patent from her. This 10 lakh represents the cash outflow. Just to do my R&D also I had to spend a lot of money, but under US GAAP they are saying normally you can do this, but you can't do it for yourself with some exceptions. Acquisition of a patent from external party results in an asset, but internally developed R&D costs that ultimately lead to a patent are, look at this, are expensed as incurred, but there is an exception coming up in the next slide. But the general rule is, this is the general rule, and exception in the next slide is beyond the scope of this class. So, we will not even go into it, but I will just 30 seconds. Exception exists for internal R&D of computer software companies, where up to the point of technological feasibility it will be expensed and thereafter capitalized. But do not worry about the exception. Go back to the previous slide. So, you will show it under asset if it is externally acquired, and for normally for internal development or internally developed intangible assets, you will normally show it as an expense normally. There are exceptions, but we will not enter into the territory of exceptions. For this class it's too much कि यार तुम्हें कौन सा कोई US GAAP के experts बनना है, right? Because this is not Indian GAAP, right? Next. So this is exception and beyond the scope. We just said it. Next. What was the finite life versus infinite life? Finite life, indefinite life is where you can't determine. बहुत लंबा चलेगा. Finite is something like 5 years, 10 years, 20 years. That is finite. Indefinite is पता नहीं how I can't either determine it. Maybe it is going to for 50 years, 60 years, 70 years, or so. If it's a finite life, it can be amortized. If it's an indefinite life, it will not be amortized, but it will be tested for impairment. If it's a finite life, it will be amortized, and we know amortization process is the same as depreciation process, right? So it will be amortized if it's a finite life, and if it is indefinite life, then it will not be amortized, but it will be tested for impairment. And if impairment shows ki yes, the value of this asset has gone down, then to that extent you will reduce the value of the asset. Next. And under IFRS, what they do, intangible assets, they classify the expenses into research costs and development costs. They classify the expenses into what? Two types, research and development. Research is that, you know what is research, right? Everything that we do to come up with a prototype. With a prototype, 3 idiots दिखा था ना? That student after like 3 months and what? He developed that helicopter, right? So, drone. He had developed that drone, right? So the drone, it was a prototype. He has not commenced mass production, right? So everything that he did to develop that drone was a research related expenses. So that's what is incurred for current or planned investigation undertaken with the prospect of gaining new scientific or technological knowledge. No, even not that also, to be honest. You are only all the research work that went behind it, is the research cost, and research cost must be expensed. All research cost under IFRS must be expensed, but let us look at the development cost. Development cost is application of research findings or specialist knowledge to production. Applying whatever research you did for the purpose of production, that is a development. So the development cost, whether it's of a one drone, even that cost will occur. I had to first I came up with a scientific formula on how to do it. That is research, and then I had to actually buy some various components to develop this drone. So that is development cost. You got the point? Na? First one is a theoretical aspect. Second is a practical application of theoretical knowledge for the purpose of production. So incurred for application of research findings or specialist knowledge for production or production method or services or goods prior to commencement of commercial product or use. So once you have done it for one, now you know how to manufacture hundreds. एक बार एक बन गया, using the same technology and the same this thing, you can now make hundreds. So prior to commencement of commercial production, it is called as development cost. And research cost was to be expensed, and development cost has to be capitalized when it's sufficiently certain that future economic benefits will cover the related development cost. So the development cost. So in one sentence, if a question comes, fill up the blanks. Let us say, I have no idea. If a question comes that generally or usually under IFRS, I am just saying, yeah, I don't know, abhi that question paper set nahi kiya hai. Research costs are to be expensed, but development costs are to be capitalized. So I can give you this thing, fill up the blanks, and then I can fill up with expensed, capitalized, or some other capital expenditure, or some 3-4 choices de denge, then you choose which is the right one, right? Next. Rules for impairment of, they are same. The rules for impairment, kitna slide aage, 87. ठीक है, we are okay because 92 slides है. Rules for impairment are same for same rules है, ठीक है. Rules for finite life intangible asset, जो whatever we just saw in US GAAP, the same rules apply for impairment. tested for impairment when indicators suggest that impairment may have occurred. First step is the recoverability test, the one that we saw, and second is the computation of loss, right. It is exactly the same process, so there is no need to repeat. Next. And for indefinite life, that was for finite life. For indefinite life, even this recoverability test is not needed. If carrying value is less than fair value, no impairment. If carrying value is more, impairment. Are you getting it? So, this is even simpler. Next. Goodwill, and this is the last topic I think for the day. Goodwill, and it is very simple by the way. You bought a business. क्या हुआ? पानी तो पी लें. You have bought a business. Let's say you bought this classroom. Let us say. Exam. Just assume. बोला classroom कितने में बेचोगे? बोला we will buy this classroom at कितना? ना 10 लाख 10 lakhs 10 lakhs. But then you realize that the cost of chairs, tables and equipments itself is actually 20 lakhs. Say, pure wood है, एकदम teak wood है, assume. So 20 lakhs, but there are liabilities to be paid of 12 lakhs, right? So you have bought 20 lakhs of assets, 8 lakhs of liabilities. So what is the net assets? The book value? 20 minus 8, 12, and you have bought it, let us say, for 14 lakhs, say. ज़्यादा दे दिया, right? बोला the book value of assets, but बोला why did we pay more? Because to develop a classroom of this magnificence would have taken you 6 months, and you wanted to do it right now. So, you said okay, let us pay 2 lakhs extra. So, you have not done for that purpose. Let us say you thought jointly ki getting a ready made classroom at 14 lakhs is a decent deal, but the book value of the assets is 20 lakhs and the book value of the liabilities is 8 lakhs, right. So, you have paid 2 lakhs extra net book from the book value. So, when you do such things, then this extra 2 lakh is called as goodwill. So, you account for it as goodwill. What was that 2 lakh extra for? Because the question will come up in the accounts. You are taking in your accounts, what will you show? Well, I paid 14 lakhs, but I got assets of 20 lakhs, I got liabilities of 8 lakhs. So, effectively what I have got is net assets of 12 lakhs, but I paid 14, so 2 lakh kahan gaye? In the books of account 2 lakh kahan gaye? Well, 2 lakh was because of goodwill. We are all clear? So, that is what it is. So, goodwill is the excess of amount paid over the net assets, over the fair value of its identifiable net assets. It cannot be amortized, but it is reviewed for impairment. So, goodwill cannot be amortized, but it is reviewed for impairment. So, whether this goodwill really exists or not, 2 years later you will say, yaar, khatam karo isko. It is unnecessarily sitting in our books as an asset, right. Next. So, let us look at an example, a very simple example. The total we have paid 10 million in cash, the value of total assets is 19 in this example, value of total liabilities is 13, the net value of assets minus liabilities net assets is how much? 6. How much did we pay? 10. What is this 4 difference called? Goodwill. And how do you account for it? Accounting is, look at this, this is the same, this is the net assets, total assets and total liabilities are your net assets. So, total assets acquired were 19 debited, total liabilities acquired were 13 credited, right, and how much cash did you pay? 10. So, cash did get come in or did cash go out? Cash went out. Decrease in cash is credit, cash account is credited. बोले लेकिन प्रॉब्लम ये है कि ये तो 6 है, 6 का नेट एसेट्स था, पे किया 10. So, what happens to the balance? That is called goodwill. Actual में loss है, but rather than saying कि loss हुआ, a fancy term is ये goodwill है हमारा, ठीक है. This is our goodwill. Next. Yeah, next. So, depletion is the same as what we have done yesterday, right? Depletion we said is for natural resources, बाकी depreciation ही है, right? Depletion is for natural resources, mines, quarries. You have a oil exploration companies, ONGC drilling oil, बोला इस इधर बहुत सारी oil है या gas है, so it's for all those purposes. Next. Companies measure depletion on a units. We said yesterday, we gave that example of coal mine, do you remember? We said 10,000 tons of coal hai. This year I dug up from the coal mine, instead of 10,000 tons, I dug up how much? 1500. So on a units of production or a units of service basis, how much did I dig? 15%. So I will provide 15% depreciation. Do you remember I said it yesterday? I said it, right? So depletion is expensed and may directly reduce the asset account, or you can put it under accumulated depreciation as a contra account, which you already know, right? Clear na?
Yes.
Right. Next. Done. Hi, this is Dr. P. Sanjay and I am a professor at Indian Institute of Management, IIM in Sirmaur. If you like my videos, please feel free to subscribe to my YouTube channel. Thank you.